LBR LBO Brand Summit 2017.
Good afternoon. I'm really excited to be here because coming from a tech background to speak to audience of marketeers. Right, so I'm going to touch upon a few things on fintech industry. First, to start off, who in this audience enjoy your banking experience? Right, so I get the answer, right? So I have a good news for all of you, right? The fintech revolution is coming up, right? And it's going to change the way you do banking and how the banks are going to serve you. Now, if you look at banking, or rather the financial industry, it's a highly regulated industry, right? So there are certain pluses as well as largely minuses, because since we are so regulated, we cannot do a lot of things, right? So there are so many red tapes, there are so many no's if you try to launch a new product or new application. The governance will come and say, no, you can't. You'll get big warnings, and if you cross, you'll get big fines, right? So traditionally, if you look at banking, started off like this, right? The customer and the teller was originally separated by iron bars. And we had teller machines which didn't have screens, right? Only the iron buttons were there, and you punch the number and give them out, right? But today, by and large, it has transformed a lot, right? So this is what we're talking about today, right? The concept of box banking. You do all your banking at a box. So here, you will not find any tellers. So there won't be any banking staff behind this. It's just you go and sit in front of a machine, and sometimes you may get a staff from a central call center, or sometimes it might be a bot where you'll not even see a physical person on the screen. So to this year, it has been 78 years since we started the first bank in Sri Lanka. So 1939 was the year where banking has started in Sri Lanka. So from that year onwards, we have evolved a lot, right? But if you generally take a transaction still remains the same, right? So if you want something, what you'll do is you'll basically exchange. So if you want a good, you'll probably start off exchanging something which is the equal value, right? So it started off first with stones, then it came to coins, then it came to currency. Today we have this wonderful thing called plastic card, right? So if you look at, most of us prefer the plastic card because we don't need to go to ATMs and withdraw money, and we just simply pay. Right. Now if you look at going further, some people doesn't even want to use the plastic card. It has evolved into completely electronic money, right? So PayPal, Checkout, VPay, so these are the technologies which are evolving where it's replacing all these traditional things. Now this year is a significant year, right? We have 3 generations in our workforce. Generation X, Y, and Z, right? This is going to create complex problems for everybody, right? Especially for financial industry, because the expectations are going to be completely different, right? Now, the customers who were there 25 years ago, I can still remember my mother putting half day to go to bank, right? Today, we don't want to spend 1 hour in the bank, right? We even want to go to the nearest ATM where there's a drive-through, right? But future is going to be completely different. They would not want to go into a branch. They would rather prefer the branch coming to them. So we need to look at different channels which could cater to that audience, right? I don't think my daughter, who is 1 year, would go to a bank and open an account. Rather, they'll look at something like social media, Facebook or something where they can hook up and open an account. So that's going to be the future. So let me give you a slight introduction about my company, what we do. So, we are not a front-ending company. We are always behind banks. So we support banks in terms of delivering certain technologies. So we do the highest number of cash and check collections in Sri Lankan market today, supporting about 9 banks. So I'll share some insights which we gathered from being a startup for the last 3 years, which might be really interesting, right? The first insight is when we wanted to deploy cash deposit machines in Sri Lanka, that's 3 years back, right? Our expectation was for a day to get 100 transactions done on this machine. Believe me, first 3 months, we had only 10 per day. People come with the money, they look at the machine, go to the counter and deposit, right? So the reason was nothing on the technology. There was no failure, right? Market was also ready. The banks were ready. They were encouraging to go for this. But people had that tech fear, right? So we got a couple of interns near the machine, look at the people where they bring cash, bring them, train them. So they're not supposed to deposit the money, but they train the users. Today the success rate is generally average. We do about 450 transactions on a machine. Right? So 4 times higher than what we were expecting. Right? Second thing is, so we were advising the banks, let's do it on Western Province first. And we look at Colombo, and we wanted that because all these tech-savvy people are in Colombo. But 8 months or 9 months down the line, we figured out the highest deposits are not happening from Colombo. It is happening from Kandy, Matara. In Colombo, it's Maharagama, Kiribati, Panadura. Right? So we figured out that the shift is actually, the technology shift is actually not in Colombo, it's outside Colombo. Right? The reason is, it's because of the need of the customer. Now, if you look at Maharagama, generally we get the transaction, the highest volume is deposited between 9 to 10. Same time, somewhere outside Maharagama, there is a withdrawal happening for the same amount between 11 to 12. Right? So what was the connection? We were looking at why, right? And a very simple thing. So the Pamunur people, they do their sale, put the money into the bank, go home, nearest ATM, they withdraw the money. So money in transit is bank's liability. So people use it in a different way. So most of our transactions, if you look at, it's happening after banking hours, after 6 o'clock. So we found out that biggest transaction volumes are coming from retailers. Now, I have Taraka here in this panel, right? The biggest regulation in this country, the regulator says you can only deposit 200,000. If you go beyond that, you need to have the KYC, you need to know the person, you need to collect the identity card. We get people depositing 2 million. They do it in 10 transactions. So there's nothing wrong in that. So you go into 200 blocks and do it. Right. So what we provided, or what we bought into the market was 24/7 ability to deposit money, pay your bills, as well as do any kind of payment-related transactions on a machine. Right. So now, going further, right, I said the plastic is dying. Right. One thing is, because you get so much of bank customer service officers coming and promoting your credit cards, and your wallet becomes thicker and thicker every day, and now you don't want to carry cards. On top of that, you get loyalty cards from other people. All the cards are there. Now, cards are dying. Right. Now, this is a very good scenario for banks, because if you are implementing cards-based solution, you have so much of other things that you need to invest on. The POS machines has to be there, the PCI DSS security has to be there, right? You need to have certain server infrastructure back in the head office. So now people are shifting to very simple things, cardless transactions on mobiles, right? So this is basically a very simple concept, which Visa Master is already in this. You have a QR code as identification and use transfer based on QR code. Right. So one of the key things for this kind of technology to evolve is this T+1 and T+2 are gone now. So if anybody in the banking industry would understand what is T+1, T+2, that is transaction day plus 1 day settlement or 2 day settlement. Right. So this concept is gone. Now, if you implement a solution in a restaurant, the waiter would want to get the tip on the spot if you're paying on electronic money. If you go on a pick-me, the driver, if he's been tipped, he would want to get that tip on the spot on electronically. So nobody is going to wait for T+1 or T+2. It's online, instant, and real time. So this is what the banks need to look into. Right. Now, as I said, 3 generations. Right. Now, the challenge is, if it was 1 generation, okay, we can look at new technology and manage it. But you still need to honor the check. You still need to honor the guy who comes with the QR code. Right? So this is going to be a tremendous challenge. And mind you, if you don't address this, you're going to lose the customer. And who is going to take your customer? Not the next bank. It's going to be other industries. Telco already coming into the place. Right? EasyCash and Mcash already came and took a part of the banking sector. Right? So fintech revolution, other fintech companies, what they do is they also try to put products out where consumers' requirements are met. Now if you look at, there are certain companies outside Sri Lanka, in the Asian region, who look at your social profile and give you credit. Right? If you look at your Facebook and if you see what restaurants you go, who are the people you hang out, you can basically get an indication what is the credit worthiness of this person. Based on that, you lend. Right? But here in Sri Lanka, we can't do that because of our regulations does not allow us. Right? If you have heard about this great company who was selling online books, today they are in fintech space. They offer student loans. Right? So if banks do not individualize their solutions to the customer needs, they will be hit by all this. Right? On top of this, when the blockchain comes, right, we all will be challenged because it's going to be internationalized products which is going to come into our market. Right? So there's a great opportunity for all of us to get together and build this industry to face the future challenges.